Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every time that the market tested zone, it got rejected to the upside quite aggressively. And at the moment, the market is testing again the exact same level from which all these previous moves to the upside have been created. So there is again a good probability of seeing a potential rejection to the upside away from this level. Let's drop down on the weekly time frame and see what we have. Now, from a weekly standpoint, we can notice that in creating this push to the downside and testing the area, the market has also printed in overextended M pattern. In fact, starting from here, the market created this overextended M pattern, therefore increasing the probabilities of a potential push higher. Now, that is, in my experience, after such pattern, what the market usually likes to create when there is an overextended M pattern or overextended W formation, like for example we had here, which is simply the inverse, there is then an increased probability of seeing a push lower, completing the pattern at the neckline. So in this case, it's not obviously every time, but there is an increased probability of seeing a potential push higher, since also this is a quite strong historical monthly support and demand area. We can also notice that as we have an impulse and now the start of a correction, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse level, impulse candle, and that essentially gives us a first upside target at 0.32 here of the fib taken on the impulse leg, which would be the first upside target. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, we can easily identify the structure. We have an impulse to the downside, correction, lower low, equal high. After that, the next logical step would be first a correction and then a rejection to the upside, essentially printing this inverted head and shoulders. We also have quite strong structure support lining up at this area. So if the market will now go and retrace to this level, there would be an increased probability of seeing more institutional longing inside of this zone, which at that point could further increase the probabilities of a potential push higher away from the level, also creating this inverted head and shoulders. We can also notice that this would be a confluence of support zone because we will also have this impulse and correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have the 50% and 0.618 retracements lining up exactly with this previous support, therefore creating confluence of support. And when there is a confluence of support area, there is an increased probability of seeing institutional longing. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. And let's check the data precisely for the GBP. Now, if we're looking at the GBP, we are actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can notice is that with the last reports, net positions have been decreased. We went from having 93.7K all the way down to 40.3K net positions. So clearly institutions have been decreasing their net positions with the last reports. However, we can notice how the market has already been printing lower lows and lower highs into that support. We still don't have the new report, and already with the two previous reports, instead of adding more shorts, institutions have already started closing shorts. We have 11,000 shorts closed with the previous report and 2,500 with the last report. However, the very last report has been missed because there was the holiday and the delay in the release. So we don't have the new institutional data yet, which is about to come out. Now, there is a good probability that since we are now inside of that historical support, the new report will see and will show us that institutions have now once again started adding longs and continued to close their shorts, because already with the two previous reports, we were not seeing any shorting anymore from an institutional perspective, but actually closing of shorts, so taking profits on this push to the downside with their shorts. So at this point, since we're now at support, this could mean that especially on a retest of a confluence of support level like this, there could be more institutional longing at that point, increasing even more the probabilities of a potential rejection to the upside away from this level. So if the market will correct to this zone, and we will start to see more institutional longing, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.